Jerome Powell spoke a little over a week ago, and his comments set the market on a positive trajectory for housing. I'll break it down next. If you get some value out of this, or you like what you hear, make sure to subscribe to the channel, hit the bell for notifications. And if you want to talk about how these Fed comments and the pending rate decisions happening in September might affect your real estate plans, you can schedule a call with our team with the link in the comments. Jerome Powell spoke a little over a week ago, and he came out at the Fed's annual retreat in Jackson Hole and set the stage for a rate cut at the September 17th meeting that's coming up just in a couple weeks here. And it's very clear from the futures, from the reaction from the market, that the Fed is almost guaranteed to make a rate cut at the meeting. The comments from Jerome Powell that they're leaning towards a rate cut, that's what all the data says. I'm going to break down all the data here for you momentarily. That's the good news here. And he cited downside employment risks because of what's going on in the job market. He cited a low tariff impact with inflation. A lot of people were worried about that, and that's not how things have played out. And lastly, and probably most importantly, he mentioned in his comments, because of the restrictive policy, there is a baseline outlook and a shifting balance of risk that may warrant adjusting policy stance by the Federal Reserve. So that's the most important comment that we're going to hear from his speech that he made in Jackson Hole. Then what happened afterwards, this was pretty incredible. It was just 2 Fridays ago, right before the Labor Day weekend here, we saw mortgage rates drop. They hit their lowest levels of the year last week in the mid 6% range on the 30-year fix, and that's a national and a local number you're seeing get quoted. Locally, we're seeing even less based on the programs available. And we also saw the Dow Jones rally 800 points immediately after the comment. So the market responded very favorably. And when you look at what's going on with the economy and some of the data points here, it's very clear this was the right move. And it might be a little too late based on what a lot of folks have talked about. They wanted to see a rate cut in July. That didn't happen. So September 17th, the new target. And the message here from Jerome Powell, and that everyone needs to be aware of, is that affordability is improving when it comes to housing, and volatility still remains in the economy because you now have core PCE, core inflation. It's hovering right around 2.9%. The target was originally 2%. So that number's in the range there. What we've also seen happen is with the job market in 2024, they were adding 168,000 jobs a month on average. That number shrunk to 35,000 this summer. So the job market has changed dramatically. Unemployment sitting at 4.2%, and the GDP is at 1.2% right now year to date. That's half of where it was in 2024. So you can see there's some volatility in the economy, and affordability just improved. That's the takeaway here. So knowing that's the case and seeing that 6.5% rates are here, what does this mean for people that want to buy or sell? So let's start with sellers. Because of rates coming down, there is clearly going to be a bigger buyer pool. Now, there's no guarantee it lasts, and that's what sellers need to be clear on. There should be a bigger buyer pool this fall, and that means positioning your home properly when it comes to pricing and looking at active listings and looking at what's sold and using the pricing at the last sale strategy, which really works well in our market. In the suburban counties, we see homes on average sell for 99.6% of the asking price. Well, all of a sudden, with this bigger pool of buyers, the September, October, November selling season just got a lot more interesting. There may be some opportunity with people that have been shut out in the market and now want to get into something before the end of the year. For home buyers, with 6.5% being a reality on a 30-year fixed, and we're seeing programs like PHFA, you're getting rates below 6%. That's a first-time buyer program in Pennsylvania. We're seeing that jumbo loans are in the low 6% range. We're seeing FHA loans below 6%. There's options out there for you as a home buyer to get a lower rate. So if you've been waiting for rates to come down, there's an opportunity now, and there's no guarantee it's going to last. So there's, again, this window and this moment in time that you may be able to take advantage of. And what's clear is that the affordability has improved, and volatility in the economy still remains. So this is good news for anyone who's been thinking about transacting, whether it's a seller or a buyer in the short term. And we'll see how these long-term effects play out because there's uncertainty and there's a little volatility in the economy right now. We're seeing that there's a policy shift happening with the Fed, and the market's already reacted and made it clear where they're going. So there's a lot of data here, right? There's a lot of information in this video. If you've got questions about your situation, you want to know what financing rates and packages are out there and available, you've got questions about the buyer demand in your segment of the market, this is all the more reason you want to schedule a call with our team with the link in the comments so that you can understand exactly what this all means for you and your situation. Affordability is improving, volatility is still there, rates are at 6.5. This is a lot of great news heading into the month of September.